This is the PLTR one-year overview reading for the year 2024. It's currently October 12th, 2023, 8:46 p.m. Eastern Time. PLTR at the time of this reading in the extended hours is currently $17.96 USD. And the shuffle file for the one-year reading for 2024 was created on March 26, 2023 at 7:11 p.m. Eastern Time. That's this video right here. All right, so the overall theme and behavior for PLTR in the year 2024, guys, this is an exceptionally difficult reading to do, to pinpoint highs and lows, just based on the fact that it's such sideways behavior for the theme card. The power card is an attempt to establish support with sideways rotation. It's crossed with at least one brief peak that's easily missed, followed by a decline through multiple supports. Behavior around the highest high, we have a rally that increases with momentum, moving forward into the high, significant on a one-year chart scale. And then behavior out of the lowest low, a notable rally on a one-year scale out of the low, offering opportunity to open up a short position or close a long position, indicating that when you see this card in a low significator position, it often indicates that we see the low more than once. And that's very likely the case when we have the power card as the theme card, which is sideways rotation, attempting to establish support. So very sidewaysy behavior. When we take a look at the 10-year overview, kind of like to inform ourselves a little bit more on that. What's interesting, what I noticed here is that we have the Knight of Swords here in the 2022 placement. And if we go to the 2023 reading, we've got the Knight of Swords in the low position. So my sense is that plus or minus a year, remember, but sequence of events is super important. So 2023 had the Knight of Swords opportunity in it at a low. And now it looks like what we were doing in following the Knight of Swords is there's an important resistance that's highlighted on a one-year chart scale. Well, actually on a multi-year scale, it's highlighted. And then we see it here on the 2024 reading appearing as one of the high cards, indicating further that we go from the low in 2023 to a high in 2024, and that's what that high indication is here. So, but we're off by a year as far as the timing. So sequence of events is accurate, right? We're somewhere kind of like doing this like back and forth between the Truce card and the Prudence card. And I say that because this is very prudency kind of energy. And then we've got the Peace card for 2025, which is also a strong correlation to the Truce card. So I think we're kind of like back and forth between the two. Before we get into the week-by-week chart behavior, as well as the timing of the highs and the lows and the best trade opportunities, I want to just make sure everybody's aware the whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. Imagine if everybody in the stock market took their energy from the stock market and put it towards goodwill, how much better the world would be. So we can at least accomplish a part of that together as a team. And the way that we do that is on the resources tab of our website, Tarot for Traders. We ask that you donate 5% of the profits forward to one of these charities. Just click on the link and then 5% of the profits back to the channel through one of these links. It leaves you with 90%, well more than a stockbroker would leave you with. Just make sure to spend that money out of love. As long as you follow those rules, you're an angel investor of the channel. The universe is going to send it back to you tenfold. Not to mention you'll get an invite before the end of the year to a private Discord it's private only for people who regularly follow through on the rule of karma. As far as chart behavior in the early part of well, first off, guys, so the way that you want to read a 1 year, it's really important that you understand this. Not each card's energy on the timeline. Each of these cards going horizontally across like this. These these pairs of cards, 2 here, 2 here, 2 here, and then again here, 2 here, 2 here, 2 here. These cards going from left to right indicate 2 weeks out of the year, but not each card's energy is going to line up perfectly with 2 weeks of energy, 2 weeks of time. So we need to make sure that we allot for that. We're following the sequence of events over the timing. The timing will be accurate for the most part and maybe for the whole part, but at moments where it isn't, follow the sequence of events and it'll keep you on track. It's usually like a plus or minus 2 week wiggle room when it's not right on point. So give it that 2 week wiggle room. All right, so in January, in the early part of January, we have kind of like a mixed situation where we rally early on in the early part of January, and then in the later part of early January, like the second week of January, we have more of a decline. There's also a trade opportunity in there involving a peak that we sell off from pretty notably. The behavior around the low for January forms when from a near overbought peak or crest, we have a notable sell-off through multiple support levels on a multi-day scale. Behavior around the high for January, there's erratic behavior back and forth through the same price level near the high for January. And in the midst of that erratic behavior, we should revisit a crest that was recently a past opportunity, so probably towards the end of 2023. Hard to say without having a markup done for 2023, but in the later part of January, we should see notable decline through multiple supports, but then there's a trough on the cusp of January, February, followed by a key support level there in early February, and off of some sideways rotation really early in February, we have a notable rally taking us to a high in early February, and then probably again a slightly higher price level later in February, and that second one later in February will form with a big move on a multi-day scale standing out, and that'll be that price level at the high there in February is going to be associated with the Peace card, which is the sneak preview card for 2025, so it's pretty relevant. And then we have this failed attempt to break through key resistance on a multi-day scale, followed by a decline through key support on a multi-day scale in the later part of February, probably 2 local troughs in the last 2 weeks of February. What do I mean by local troughs? Right, so like you could say that this is a trough, and this would be a local trough, this would be a local trough, this would be a local trough, so hopefully that makes sense. But we may have as many as 2 of them, but there's a prominent trough on a 1 year chart scale around the cusp of February, March, and a period of sideways price movement, bumping along resistance, moving sideways, maybe breaking through, but bumping along resistance, moving sideways. That same support level that was highlighted around the cusp of January, February will be highlighted near the March high in a period of sideways fluidity, equal amounts of bulls and bears inflow and outflow, so probably pretty mixed around the March high. When we have this failed attempt to break through key resistance, followed by a decline through key support in the later part of March, and my sense is this is really an easy read here. You've got the 5 of Swords, and you got the 5 of Cups. The 5 of Cups is like, we had this failed attempt with the Five of Swords, and then we falsely established support after the failed attempt with the Five of Swords, falsely established support, and then we go in and we attempt to break through that resistance that was failed with the defeat card. Here in the disappointment card, we attempt to break through again, but because we have this falsely established support, we expect to break through. Instead, we turn around and we decline through that falsely established support price level, which should be the trough there. But so like keep that in mind, right? Think about that. So we had this failed attempt at that key resistance in the later part of February, followed by decline through key support, and then here we have kind of like on the cusp of March, April, and April has possible high again. There's another failed attempt, so it's probably a similar price level, and the energy of the disappointment card might lead into April. And then after a notable decline from a peak or crest into a low in March, which we might see twice in March based on the Dominion card, there'll be some price swings there around the March low. This is probably a high for the high correlation here, right here. That's the high right there. Boom, that's being spoken about. Let me mark off that cross-reading congruency. Guys, if you're interested in learning more about SO meta-analysis, we have an ebook. You can also order the cards along with the ebook. It's a specific deck of tarot cards that we use. Only two tarot decks in existence that still follows the old system of tarot, the original system. All the other ones, I'm not saying they don't work, but they're not tarot. They're considered oracle decks, right? So the failure card is the high correlator card of the 10-year, right? There's a high significator plus or minus a year here. And then we've also got on the 1-year reading, we've got a correlation here to a highest high. So this is a significant price level here. We actually might push the upper end of a range higher here based on this Aeon card. Behavior around the low of April, we have a period of volatility and a sharp drop that stands out in a period of volatility. And there's a lot of price change in early April between a key technical resistance level probably there. Like a lot of price change there, and you should be able to play both directions a leg at a time if you play it well. In early May, we have a pop and drop. The high of May has a fast sudden move higher into it, and then mid-May there's a pretty notable decline on a multi-day scale. A prominent trough towards the end of the month of May, and there should be a notable move out of the May low, even in the face of seemingly overwhelming headwinds or really kind of like bearish technical, something along those lines. Something convincing us that we would go lower, but instead we go higher. The full card also indicates a significant opportunity, like that should stand out amongst other opportunities in the time frame of the reading. So the full card is an improbable opportunity, really like auspicious opportunity. And it's hard to see what it is. It's really hard to see what it is, but there's a high, most likely based on the Ace of Wands here in June. There's another high somewhere around the cusp of May, June, offering an opportunity. Early June, we have a notable decline through multiple support levels, a notable reversal off of the June low that'll stand out on a 1-year, and there's an important range that's highlighted towards the end of June. So I think that important range is going to be to the downside in the later part of June. Early July, we have a prominent crest and peak and a notable move to the upside. The high of July, we have a decline out of that increases with momentum moving forward in time, and it actually pairs really well with the Ace of Wands just ahead of it in June. So sharp decline mid-month of July, and then a notable fake out shakeout of some kind towards the end of July. And maybe that we're made to think that we're going lower, but instead we bottom out. And then we have a sideways fluctuating rally in early August that precedes a decline. That's the Hermit card. So a significant decline off of another high here. In any case, we decline pretty notably mid-month of August off of a high to revisit a support level towards the end of the month of August that we recently met once before in a period of sideways rotation, and a sharp drop will take place in that period of sideways rotation as well, taking us to a low, which is a key support level. The August low is a key support level on a multi-year chart scale that should be relied upon with a big move out of that around the cusp of August into September. It looks like a lot of back and forth here. There's an important technical price level near the September low, and it looks like we might see the September low twice in a period of volatility, but that period of volatility does end with a fast sudden move higher, rallying out of September into October, reaching for a distant resistance. There's a halting of a bullish trend around the October high marked by a decline through key support, and we do sideways rotation along key support on a 1-year scale in the later part of October. Big move out of a low there. So like there's a low somewhere around the cusp of September, October, and a big move out of oversold territory, out of that low to the upside, taking us to a prominent peak on the cusp of October, November, where we break the resistance, we stay above it briefly, and then we break back down with a full retracement. There's also, from that break back down through full retracement, we then, towards the end of the month, move back to the upside, back to probably the same price level as the peak from earlier in the month, and we successfully turn resistance into support there. And it looks like the low for November, it happens when we have that move higher, and then that move back down takes us into a low, and then eventually we have this move back up to the upside, turning resistance into support on a 1-year chart minimum. And then in early December, sideways rotation along that new support, a big move higher after the sideways rotation, standing out on a 1-year chart and taking us probably to a highest high again. There'll be a key resistance near the December high that we've met many times before and failed to break through. Later part of December, we have sideways rotation and a fast sudden move higher that ends that period of sideways rotation. The low of December, there's an important resistance level highlighted near the low on a multi-day scale where we failed to break through. There's like multiple failed attempts to break through it near the low. And then the sneak preview for the following year, it's still looking kind of flat. And guys, the remainder of this reading, you can only get that with the paid version. This is the public version. This is where you would get the rest of the prediction. Our services, SO Meta posts under our website, tarotfortraders.com. Scroll down to 1-year report, click here. And then you specify the year you're interested, specify the crypto or ticker symbol, and then order $250 for a year's worth of information. Guys, we're using the S&P 500 reading for the 2023 reading. It was created in October of 2022. We're using it today with insane accuracy. That's what these things give you. Like, if you understand technical analysis, these give you a fundamental edge. But make sure to trade responsibly. We're not right all the time. It's not a foolproof system. It's like a high 90% accuracy, and then there's places where where there's human error in some cases. So be mindful of that. But much appreciation to everybody that goes ahead and purchases the full prediction. As far as everybody else, make sure to follow the rule of karma. It's super important.